Hey guys, Dave Gandarillas here. It's Saturday around 9 p.m. January 13th. Wanted to put some more content out to everybody so that they can kind of see what's going on, give you some updates. So, as always, I'm on Facebook, but I'm on many other social media sites as well. Certainly connect with me on whatever social media site you like the most. Underneath this video, you'll see a description of what's in the video and some more information. Certainly there'll be a link for my Facebook page. Also, there'll be a link for my portfolio. So this is a portfolio I put together. As you can see, I also list, if you come to this page, you'll see the different social media sites, my personal websites, that you can find me on. So connect with me on whatever one makes sense for you, or multiple if you'd like to join them all, or if you're not members of some of these, certainly look into doing that, because you can expand your social media presence by being part of more than one. And certainly, that's good for you to brand yourself and find different types of people on different platforms. For example, Crypto World Network is crypto-minded, focused people. Facebook is, Facebook. It's sometimes personal, sometimes business. Twitter, there's a lot of celebrities and a lot of high-profile people on there. FutureNet, it's a social media site just like Facebook. They're coming out with their own cryptocurrency, so you should look into that if you're interested. Of course, Instagram, and then this is my blog. So I updated my blog today, and what I did was I put the video that I had on YouTube yesterday on here. So now it can be searched and found from my website as well. And on here you can tweet, share, LinkedIn. You can see some of the other things I'm up to. You can see some of my YouTube posts, my articles. I mentioned yesterday there's a lot of good articles for you to come and check out. So certainly come and check out my blog. Certainly subscribe to my YouTube channel so you can be alerted when I put out a new video. Like if you were on my subscriber list tonight, when I'm done putting this out there, you would get an email saying that I released a new video. So tonight I'm also going to do what I did yesterday, and I'm not going to talk about a specific opportunity, but I'm going to talk about cryptocurrencies and a couple trades that I executed between yesterday and today. I want to show you how I used technical analysis in conjunction with the trending signals platform that you can get your hands on if you get involved with CoinMD. Now, CoinMD has a variety of things going on, but they realize, people might be more interested in cryptocurrency right now than their health. So, but it is a cryptocurrency health-related coin. So getting involved with CoinMD, you're going to get CoinMD cryptocurrency, which, if it does equivalent to one of the other health-related coins that are out there right now, could drive the price to 20 cents a coin. So right now you have the opportunity of getting the coin for under a penny, something like less than half a penny. So for, thousands of coins, it's not going to cost you a lot. And if it goes to 20 cents, that's like a 5,000% increase in value from the price that you're able to get at. Now, on top of that, you're going to have other ways to generate income and generate money and savings. So it's a win-win situation. Please take some time and look at this. That's all I'm going to say about this. My point of mentioning this was the Signals platform screen that I'm going to show you tonight is accessible through this opportunity. So you'd have to become a member and connect with me, and I'll explain to you how to get your hands on that if that's something you're interested in. So without any other discussions, just kind of come to this page if you're interested. Take a look at the things I'm involved in generating streams of income. This is the social media platform that I said that crypto-minded folks are, that's what it's all about. It's all about cryptocurrency, ICOs, all that stuff. There's groups, there's going to be education, there's going to be a bunch of stuff that's going to be put on this platform for the new person or the seasoned leader or the seasoned trader. It's going to be benefits for all different skill sets. All right, so that's it. So that's it about the portfolio. The only other thing I will say is if you like this page and you want to get it for yourself, just click up in the top right corner, join now, and you can try this out for a week for free. Configure it how you want to do it. Put all your different opportunities if you have multiple opportunities. If you don't have any, or you just want to put your Facebook page on here, you can. But you know, it's a nice way as you start building your portfolio of opportunities and ways you're generating passive or team recruiting based, you know, like team building opportunities. You could place it all in one place and someone could come and take a look at it and learn a little bit more. And then either you can utilize content that's already on YouTube, or if you decide to make your own, you can place your links for your videos that you have on your YouTube channel here, so that when someone comes to take a look at this and if they want to know more information, they could just click right here and learn more about it. You know, same thing goes for this. You know, each one of these, I have a video on here that, like, it's an hour long, but it's an hour long of good information. It walks you step by step on how to get started, how to get your orders in place, how to get the money going, how to buy the ads, how to start watching the ads so that you can earn every 15 minutes. All that stuff is in these videos, and that's what I like about this page, where you could have everything in one place. I haven't added one for this, which I actually should. I just realized I haven't placed one on here. I do have some on my YouTube channel already, so I'll just modify this after this video to include a video here. So again, like I said, I have one for each one. Now, some of these have been a while since I updated, but unless something has changed drastically in the compensation plan or the way the screens look or something, I don't necessarily always update these often, because if you know how to get started and you know how to do things and it's still applicable, there's no reason for me to make a new video. All right, so I only make a new video and refresh these when there's enough of a change that have occurred in the opportunity. Something has changed that requires me to kind of go through the whole process again, or maybe there's some new information or new opportunity within the opportunity that comes out that I want to talk about. You know, those are all things that'll trigger me to put a new video out. So come here, take a look at it. If you like the page and you want to get started, click here. It's only $10 a month if you decide to keep it. And I'm going to tell you right now, you're going to earn a lot more than that in being professional about your business and presenting yourself as a professional. And in addition, if you do decide to share this with your team or people you know and they like to do this, you'll actually earn a little bit of a commission from them. And before you know it, you'll be making more than $10 a month. And this will be like a no cost. And you'll actually generate some positive income flow from this. It does have an ad that when you log in, when you first log in, everyone that logs into their page needs to watch. So that's yet another good reason. Here, I'll show you real quick. When you first log in, I'm already logged in, so it's not letting me. But when you first log in, you can buy an ad that all the residual income TV owners of a web page will watch. So there's even a way for you to advertise your opportunities on that page. Okay, so let's get into the meaning, the meaning of this video, so to speak. This is actually a good post I threw up there. I use this service called Buffer, where I kind of create timed posts to be consistent, to help me be consistent, so I don't have to go and push a button or do all these posts. I decide what content I want to put on. I decide to schedule to put them on there, and it's just a way to kind of continue to flow the information to the people that are following me and provide value, provide some you know, very positive quotes. And this is, you got to remember this. This is actually a good quote that popped up. You know, you don't have to make $1 million to be success, right? I mean, everyone doesn't come into an online business thinking they need to make $1 million. I mean, you might be happy within the next month if you're making an extra $500. So don't get caught up with thinking that you have to be that person to make the $1 million. Just realize that every step that you make, you're changing your life and you're increasing maybe your income, or maybe you're increasing the ability of maybe you're not having to work a 9 to 5 and having some more freedom to be home with the kids. Whatever your goal is, just remember, it doesn't have to be 0 to, you know, the top 1% of network marketing. I mean, that's going to take time for you to get there. It takes time and skill and training and getting out of your comfort zone. So don't forget to celebrate the small wins. And that is just when you make a goal for yourself, maybe you want to make $1,000 a month. When you hit that goal, celebrate. It's a goal that you should celebrate. Don't just, treat it as something that you set out to achieve and you actually got there. So give yourself a little reward. Go out on a nice dinner with the significant other, or buy yourself something that you want to buy. Maybe take a day off from work, whatever it may be. Whatever you're doing in life that at that moment when you get that goal is meaningful for you to get. Maybe you want to buy your kid something that you maybe can't afford typically. Whatever it may be. Just don't forget to celebrate the wins, okay? All right, so let's get into the discussion. So yesterday, and today, what do I want to start with? Let's see here. I don't want to jump all over the place, but I do want to show you a couple things. Oh, first of all, let me get my email up. I didn't do that part of it. All right. So let me just get an email sent to me that I sent myself. So what I'm going to show you is a screenshot of an application that I use on my phone. So, okay, I'll just leave it here since I already popped up. So this is an application called MetaTrader 4. So this is a way for you to connect to your own broker account and execute and buy and sell and charts and basically it's a mobile phone interface, and also there's the MT4 computer interface, which is something that looks more like this. So this is just a mobile phone. It's lightweight. It's simple. It's not complicated, and you can do it on your phone. So what I want to show you is I utilized some of the technical analysis that I talked to you about yesterday, in addition to the signals platform that I kind of talked to you about a couple of days ago. And I did a trade for Zcash against the US dollar and Litecoin against Bitcoin. So what I want to start, I'll start with the Zcash to the US dollar. As you can see, I got in at 696. I'm going to put this on a separate screen, but you can see 696.93, and I got out at 709. So let me take that off the screen real quick so that I can put something else on the screen. All right, yeah. So this is the Zcash. So the Zcash USD, and again, just for a timestamp, I'll bring this back. This was done. Forex and trading markets are already into the 14th, which 3 hours into it's like 3 o'clock time zone. I believe it's UTC time, and right now we're in the approximately in the third hour is when I closed out a couple of these trades. So this one was closed out a little earlier. These were, I just kind of decided to take the profits. So, within a couple hours, I kind of generated $171 of profits. Now I want to show you on here where I got in and where I got out. So I got in at 696.93. So I put that there and I double click. I think I couldn't specify. The screen is going to be a little bit blocking. Okay. 696.93. Alright, somewhere right around there is where I got in. And then I got out at 709. Basically right here. Okay. So I've been watching the trade on this, and I've been watching the RSI, and what I basically did here, as you can see, I drew some lines, and these are trend lines, and 2 points create a trend. So I drew one up here, and then I drew one down here, you know, a couple points, and they cross here. And, you know, pretty much it's been staying within this range. So it approached this range, but the buy signal wasn't there yet. So I didn't do any trades down here. But as it started moving, the system decided it broke a broke a trend on a downtrend and created an upward trend. So what I want to show you next, if I can find it, is this it? No. Oh, I saved them. Hold on. Okay. So I took the trade based on this. So this is the screenshot. Okay, so I gotta say one thing. I can no longer show you real-time access to this platform based on the company's guidance from their lawyers. For whatever reason, I didn't question it. I'm just following the rules. So what I did was I took a snippet, screen capture of the page so that I can show you. So what I ended up doing is I ended up getting in at 696.93. And where was that? Over here. So I got in over here, and then I got out. It had a buy signal to get in, so I bought to get in, and then that's what triggered me to buy. And then what kind of triggered me to sell was that it was approaching this upper bound, and it was gonna hit some resistance up here, and I said, you know what? I'm looking at it right now. I'm happy with $120. Let me get out. So that was, I mean, literally, that was not more than an hour and a half that I got in to get out, because you could see it here. This is a 30-minute chart. So I got in here and I got out here. So this is within the hour. I made, I was able to make 120 bucks in an hour. And now, as you can see, I mean, yeah, I missed a little bit on the upside, but you can see it's kind of changing direction, and chances are it's going to approach this trend line again. So, I mean, if there's another signal that comes out for me to buy again, maybe I'll buy it. But again, this goes back to yesterday's discussion as well. If the trend is upward, this trend line, you don't want to be trying to sell short on an upward trend. On a downward trend, you sell short. On an upward trend, you buy long. So here, even though it's coming down, me personally, again, this is all personal. I'm not giving you any kind of financial advice. I'm just talking about what I did. I would never get involved with a short sell on a market that's pushing higher. Even though there's a trend line here and it bounced off this trend line and it went downward towards the bottom trend line, I'm still waiting to set the trap when it's down here. So the trap today was, no, it didn't breach, it wasn't, so the reason why I didn't wait for it to breach the lines here is because this trend line seemed to be represented and it stuck pretty good. So for me to kind of wait for it to breach here, it was going to destroy the whole cone and the whole trend line, and then everything would just go out the window. So what I did was I took the high probability trade using this other platform, Signal. Where is it? When it was down over here, there was a buy signal here for 696. And yeah, I missed it a little bit. I missed it by 0.2. So I was pretty close to this target. Once this was triggered, I was in. But again, I waited a little longer to get out, only because I saw the possibility that maybe it could go up a little higher, and it did. Right? It went up to 709, actually 712. So I kind of felt that there was some more leeway on the upward trend, even though here, it told you to get out 50% at 703 and another 25% at 712. 712 actually, it was pretty damn close to the peak, right? Look. Oop. What did I do here? let me put this on the screen so you can see both. Right here, it tells you to get out, sell 50% of your position at 703 and then 25% more at 712. And if you come over here and you look at this 712, it pretty much just like peaked out when you would have gotten out of your, like, so you would have been 75% out of your position, and right now you would have 25% more of your position, and basically you would be letting it ride. And you got in at 696, and right now you would have a stop loss set at 703. So as long as the price is going to continue going up and it doesn't go down to 703, you would still be in the trade. But even if you get out at 703, you made, you know, what is it, for $7.40 or something on your trade. So it's a no risk trade. In this situation, when you cash out here and you cash out here and you have 25% left and you set this stop loss, it becomes a zero risk trade because you're in the money, you've already cashed out 75% of your position, and now you're just hoping that the trend is broken and it just continues to blast right through this and continue higher and higher. And as this goes higher and higher, this number is going to be increased. So it's going to trail the current price. So, you know, a lot of times, if you didn't have this signal platform telling you where to set your stop loss, you know, you get in over here and you're riding it up, you would most likely be putting your stop loss, you usually hide your stop loss, as they call it, hiding. But you would pretty much, you know, let me copy this line. I'm trying to copy this line, it's a pain in the butt. All right. Pretty much you would have to bring your stop loss to be somewhere down here. So what this is basically saying is you're in over here. You're willing to risk this because you're hiding it underneath the resistance level. So what you typically look to do is you look to see where things have bounced off of. So this line right here, you know, it's pretty confident that it's touched it a couple times, gone up, touched it, gone up, you know, touched this one, gone up, and then it came down, you know, it kind of hovered around here. So, I mean, it's a pretty good, safe bet that, okay, if, you know, it might come down a little bit, but chances are, unless it's really going to change direction and continue lower, it's probably going to retrace and go back up again. So there's always ebb and flows, right? There's always up and downs, and so that's it. So that's the first trade that was successful with using some knowledge of trending, technical analysis, in addition to utilizing the signals that were like, there was a green button here, and I looked at the chart and I'm like, oh, it just hit it, so I bought it. And then I set my sale by looking at this one. I kind of said, all right, well, first, actually, I had it a little higher. I had it up here. And then I saw that it kind of peaked out. It didn't go any higher. I'm like, all right, let me just set it somewhere over here because this seems to be the resistance. And it makes sense because there's other areas right here that it kind of tried to go and didn't make it, kind of tried to go, didn't make it. So this is a pretty, you know, substantial resistance. And basically, I'm not talking about this level. That's where I sold. But this right here, like right around here, is a lot of resistance on the upside. So, you know, it was facing that and pulling back. So basically that's when I decided to sell. But it did hit the 12. So if I would have been smart and set my first out at 703, right? I think that's what it was. Let me see. Yeah, the first one was 703, and the second one was 712. So I could have sold some of mine here, and then I could have just set a limit to sell here, and then I would have sold here too. So I could have done it automatically if I wasn't around and I wasn't going to be watching the charts. I could have set up limit sales for those two targets. You know, sell 50% of my position here, and then sell another 25% here. And then hopefully I would be able to come back and see where I am and set that stop loss correctly so that I would have a zero risk trade. So anyway, that was the first one that I wanted to show you. The other one I wanted to show you was the Litecoin. So Litecoin was a similar situation. Now, a couple other things I want to show you before I get involved with the trade, so this is a Fibonacci retracement tool that you get as part of the MetaTrader 4 platform. So when a forex or a cryptocurrency runs, basically what you want to do on the upside, you start from the bottom and you go up to the peak, right? So this is where it hit the peak. And now, depending on the strength of the movement up, or possibly it's going to go up, but it doesn't know where to go next, you're gonna see it either retrace back down to 23.6, 38.2, or sometimes 61.8. So as you're, if you're in on a position, or if you missed this and it peaked out at a peak, sometimes is a good chance that you can get a re-entry if it's an upward momenting trend. You could look for opportunities to get back in. So like right here, you'll see that it went up and it retraced to 23. So you could have gotten back in here. 23 is a strong. It bounced off the 23%. That means it's still trending to go push higher and higher. So you could have you could have looked for, as it peaked out here, you could have drew this tool and you could have waited and had maybe what you do, instead of getting 100% involved in your position, maybe you buy a partial position at 23.6. If you start seeing wicks, so that you see this wick, once you saw that wick happening, there's a good chance that it was going to respect the 23.6 level and push up again. So you could have had like a little short-term trade here if you really got in and get out, and if you're a scalp trader. But what you can also see here is possibly a formation of like an Elliott wave. 1, 2, 3, 4, 5. But the thing is, it kind of failed because it was the Elliott wave. The pullback should stay above the highest peak of the previous. So this really isn't an Elliott wave, but you can start seeing repetitions of these waves that occur, all throughout. Maybe this is 1, 2, 3, 4, 5, and maybe this is in an ABC mode. So, there's various things you can kind of do with that. But I wanted to show you how don't worry about missing out and buying at the high. If you start seeing a pullback, just throw this Fibonacci retracement tool on here and start picking your battles. You could do some historicals. Of course, historicals don't always mean it's going to be repeated, but if you start looking here, all right, so from here to this peak, it retraced 38.2, and then from here to this peak, it came down, hit 23, and took off again. So somewhere between the 23 and the 38 is where this thing has most recently been pulling back to. So here you can see chances are it's probably gonna, after this move, I pull back to 23, and then now this is the new high, and now chances are it's going to probably make its final push forward. If it's still going to go forward, it's probably going to pull back down to 38.2, so that would be the next re-entry if that's the technique you would use. Now the other thing to also mention is you could see that it breached these Bollinger Bands. I talked about this yesterday. If the breaching of the Bollinger Bands, when you have this all set up, it's going to come out of this, and it's a high probability that it's going to go to the median. So going to the median, you can see there's a significant Fibonacci, 61.8. So if it does what it sometimes does, maybe this is the buy, 68.1. This is, probably, maybe you buy a little bit here, maybe you bought a little bit here, you buy a little bit more here, and then when it comes down here, maybe like if you bought a mini lot, maybe you buy a multiple mini lot down here to kind of compound your your position, so that when it's coming back, you're in the money before having to pass this high again. So you can average out your trades in a way where once it finally moves back up, the combination of all your positions and the move it's doing gets you into the money. All right, so I wanted to talk about Fibonacci, but then now I want to talk about the trade. So let me get the Fibonacci out of the way. Well, maybe I'll leave it here just to see in case my example here. All right, so let me show you the next trade. So Litecoin to BTC, I got in at 1701 and I got out 187. So I'm just going to put those on the graph first, and then we could talk about other things. So the first number is 1701. Somewhere down here. 1701. Okay. So, pretty much, once I hit this median is when I opened up the position. And that was based on the, let's see if I can find it. Right here. So it's no longer the actual signal that caused me to buy Litecoin is not on here any longer. But what caused me to sell, let me bring this over. Let me move this over if I can. Okay. So the buy signal was on here earlier, but it was overtaken by another one. But the sell of 187 was kind of, I kind of decided that, I was already in here, and this is the next target where the current price action was happening up here. The next target that it said to sell was 183. So I came over here and I looked at the chart, and 183 is right around here, right? So there's a lot more that happened after I got out of this, but I was happy enough to get out. But basically, what I saw was right here. Trying to figure out here. Oh, I was in the trade and I saw that the next possible sell was 183. So I kind of looked at this and I saw 183 over here. But I actually got out a little earlier. I got out at 187, which was here. So I waited for it to go up, and as soon as I started seeing a wick, I got out. So I let it go past the 183, and I got out over here at 187. So and I got in on the trade with the signals, with the signals. I bought in originally at that level, but when I came in today and I started looking and seeing where things were, I saw a lot of these were hit already, and this was the next target that wasn't hit, and it was an actionable position, 9 days. So I ended up getting in a little lower than this based on one of these lower signal. See, these change every 15 minutes, every 30 minutes, every 60 minutes, 1 hour, 2 hours, and daily. So I had executed a trade down here that happened, and I'd never got out at the levels until today. So I kind of used the trigger to get in, and then I was kind of looking at the charts and looking at the way that this thing was sitting flat for such a long time. Actually, I think what it was is it was a different time frame that I was working off of. Might have been this time frame. So, and then the other thing that was bothering me was that it was that was the case. I kind of waited for it to get up to this level. See, at the lower levels, you see more action going on, right? You see all the ins and outs. But when I was at the 30 minute level, And when it was breaching the third, I mean, I go back to what I keep saying. Every time it breaches these Bollinger Bands, as you can see right here, I got out, and now it's pushing down. And chances are, it's going to find its way down to here. I mean, you can see this real time. It's happening. So right now, I mean, I could do two things. I can wait for it to get down to 68 and think that maybe the 68 level will bounce. Or, more than likely, it's going to end up hitting the median again. So maybe in a future video, we can come back to this chart and see if it actually did hit the median. I'll leave all this stuff on here. And we can kind of, you know, just check it out to see if it did bounce off of 68 and continue going higher, or if it came down this to the median. So if I was, for whatever reason, if I was selling short at this level, my sell short, I would either be looking to get out of here because of the Fibonacci retracement. I would be putting a target to sell here, or certainly as this median gets approached, I would be selling it if it hit the median, because chances are it bounces off the median. You see how it hit here, goes to, well, this time it went through the median, but a lot of times it hits the median and goes back. You know, hits the median, goes back, hits the median, goes back, hits the median and goes up. So here it could go up, it could go down. You know, you also got to take a look at this. At the time it's approaching the median, is it oversold or undersold? And that's kind of going to help you decide which way it's going to go. So, you know, so those are the two trades I did yesterday and today. And like I said, I was holding on to Litecoin for a little bit longer. I had more positions in Litecoin, but this was the final position that I wanted to kind of lock out. And you know, it took a couple days, but I locked out of other ones. I mean, let me see if I can bring it up real quick. So, I mean, there was multiple Litecoin. I made $15, $12, $57, $185, $24. That's the newest one. So I had multiple trades involved with Litecoin, but this final one, I just kind of wanted to show you how if you're in a trade and you kind of lost of where you should set the target or where you should get out next, this can really help you. This can help you kind of home in on, you know, okay, well, I'm in approximately here, a little bit lower. A buy signal was here to buy at 174, and now if you got in at 174, it's telling you to sell 50% at 183. So, all right, well, since I didn't sell my position that I was in at 170, right, over here, since my position was lower than that, and this is the most active signal that was just executed, I kind of homed in on this area, and then I kind of looked at this to look at these Bollinger Bands. All right, you know, 83 was already, you know, you're already inside the Bollinger Bands, but this was happening so fast that I kind of let it ride a little bit, and I was able to squeak out a little bit more, you know, and I kind of, I really picked it really close. I mean, I'm literally, what is this? This is 1.5 pips. So I was like 1.5, no, not even less than that. Like 0.75 pips from getting out at the max. So again, here's 38.2. I mean, there's a chance. I mean, really, you know, it's all guess, right? But the significant levels are 23.6, 38.2, and 61.8. Those are the ones that you can start seeing bounces. And when you start seeing a wick, and you start seeing some upward tracking, you know, it's a possible good re-entry. And, you know, you get in somewhere around here, and then if you really want to be conservative again, you would sell somewhere below this peak. So like right here, this is a resistance level. Up here, this is a resistance level. So the resistance levels should be the levels that if you want to get out for sure and you want to be conservative, you want to sell just below the resistance level so that you're out and you know, you're kind of betting that it's going to hit the resistance level and turn around. So when anything goes up, it typically comes back down to check the resistance, and it went up, and then it was a fake out, so it came down. So now there's a chance that it's down past this resistance level. Now it's a chance that it's going to come back up and check that, and then it's going to decide if it's going to continue going up or if it's going to come down. So that's why I say you get in here, and if you want to have a sure, not sure, nothing's ever for sure, but a high probability trade was to get in somewhere around here and then set your sell somewhere around here, because it could hit this and come straight down again, or it could hit this and go straight up. So there's different philosophies, and I'm just kind of talking you through my thought process when I enter a trade. All right, so I think that was really all I wanted to talk about, but just wanted to show you how, in conjunction of the Bollinger Bands, the RSI, the median, and leveraging the trend trading signals that you can get from the CoinMD system, you can give yourself higher probability trades and take out some of the emotion, so that you're not guessing, like, should I let it keep riding? Maybe it's going to keep going higher. So if you would have done that and you would have stayed in the trade, boom, it's back down. And yeah, I mean, it's 0.0187, so it's 7/100ths of a decimal spot. But that's a significant amount of money if you're, depending on how much you're putting out there to trade with. So why not get out here, and then like I said, you could have got back in here again and made another, however much this is. This is not a good tool to figure out measurements of how much you can make between 2 points. You would have to use like the other tool that I showed you, TradeView. So if you use TradeView, we brought up this pair. Oh, that's BTC. So you brought up this pair, and you came down to the same time frame that I was viewing it on the other screen. You can see how many pips you could have made. For example, if you would have got back in here and you would get out somewhere below here, you can see that's 4.58%. Or you can actually use this other tool that they have, where you can set this up to show yourself where you would get in. I'll just create two of them. You can kind of figure out, okay, so say I got in there, I'm going to get out here, and you kind of got to decide on your stop loss if you're not using the trend trader. But if you're doing this for yourself, then you would probably want to set it below this the bounces that you saw here. So you always want to go lower than that. And exactly, I mean, this is in fact, you probably want to put it below the median just to be safe, because chances are it would bounce off the median. So looking at that, and then I don't know why this is so long. Oh, here it is. So it's a risk to reward of 1.23. You have a 3.8% loss and a 4.68 gain. So whatever you're putting in from this point to this point, you would make about 4.6%. So why would you just sit here and lose 4.86% in the hopes that it's still going to go up? Get out here, right? And I guess you can see here, if you do my trade, what did I say I got in? It's 170. Yeah, 170. And then I got out at 187. Let's do 187. So I made a 10%, basically, I made 10%. I made 10% on this run, getting in here and getting out of here. So basically, that's saying that if you had a $1,000 account, you would have used that to buy your Litecoin, and then but when you sell it somewhere up here, I mean, you probably don't want to get too close to these peaks if you want to make sure you get out. Plus, there's always the spread to worry about. So I never really try to peek it, but somewhere very easily. Although my trade was 9%, but you probably could have got 10% out of it. So I mean, 10%. Even though it ended up being a couple days for me for this specific portion of my trade. It's still a decent amount, right? I mean, who's going to make 10% in the bank? Who's going to do whatever? This is all your control. You can do this all yourself, and it just takes a little bit of time and effort. The good news is, if you don't really want to go through and learn all this extra stuff that I'm talking about, the Bollinger Bands and the resistance levels and the RSI, you can very easily wait, keep searching for cryptos that you like and you want to watch, ones that you believe in, ones that, you believe are going to go up or down. I mean, money can be made in the up market and down market. So that's something in the future that you got your hands on, that you don't always have to go long. You can, short the market too, and there's money to be made both ways. But as you can see, the crypto markets are pushing higher, right? More money's flowing in. On the 15th, there's more money that's going to come in. And, why go against the trend? You don't want to go against the trend. They say trend is your friend. So you can use this platform and wait for these signals to pop up, and then come back here and put alerts like I told you yesterday. And you could have put an alert right here. Put an alert right here for this buy. I mean, I bought this a while ago, so let's go back here. I bought this somewhere around here. Somewhere around here I bought it. And what you can do, if that was the signal, you put an alert. Crossing up. Great. So, for example, if you wanted to let the system tell you, you make an alert at this level. And when it hits that buy signal is activated. Then all you got to do is come in. Once you're in, then you set your stop loss, your first target, your second target, how much you want to sell, but you don't have to sit in front of the stock trade, the crypto trade graphs waiting for that level to be breached. You could do it automatically, or in fact, you really wouldn't want to put it on the exact number. You want to put it somewhere close so that you have time to come here, and if it's, you don't miss it, right? I mean, this is on a 30-minute scale, so it hovered around this price for a while. So you would have been able to get in, pretty close to this price. And then right after that, you could have came in and you could have sold. If you follow the recommendation from the where's my other trade? Thought I had a Litecoin trade. Anyway, I lost it. But you could follow the pricing, where to sell 50, where to sell another 25, where to move your stop loss, and just, use the system. Instead of you worrying about figuring everything out for yourself, just use these signals and these predetermined sell points and predetermined stops. The only thing you have to do once you're in that final state, like right here, in this trade, if you sold here and you sold here and you still have your 25%, you do have to come back and visit the site so that you can see if you should move your stop loss, because this is going to be updated every 15 minutes. And if you're following the 15-minute trade, then you should be modifying your stop loss as they suggest you do, based on the update to the 15-minute. So again, you got to figure out how fast and how often you're going to want to trade. You can go all the way down to 15-minute trades, and you could do weekly. If you're right now, you're still. These two are closed out, so a new trade is being, they're figuring out. They're using the algorithm, and when a new trade pops up for these, you'll see a buy signal here. So right here, what basically this is saying is, you held this position for 57 days. You got in at 3/22/34/27. The date that happened was the 24th of the 2017. So you got in at that price. You set your first target to sell 50 at this price. It got executed. Then you sold your next 25% of your position at this price, and now you have 25% left. So you're going to let that 25% ride and then you're going to check back here, and you're going to continue to increase this stop loss higher and higher as the price goes higher and higher. So for whatever reason, the last 25%, the price must have gone high, and then it came back down and it hit the 42.7. So let's just kind of look at that. I'll go back to November of 17. Let's just take a quick look at that so I can show you. Let me go out to the daily just to keep it cleaner. Alright, so you can see November. Basically, you would have got in on the 24th. So let's go to the 24th. So you would have got in somewhere around here, and your entry price would have been 300. Oh, this is in this isn't the right one. Never mind. Let me find this other one. Oh, here it is. All right. Sorry. Actually, right now for LTC, there's a buy. There's a buy at 185. So if what I was looking at here was ZEC. So what I can do here, and to just complete this example for you guys, I'm sorry, I had it mixed up. This is ZEC USD. Let's look at this. All right, so in November 24th, right here, right there, you would have got in at 322. All right. At that moment, you would have sold. Set your sale. Your first sale would have been at 442. So you would have sat in here. You would have seen a little bit of a down. What do they call it? Draw down on your account for a little bit, and then it would have had you sell 50% of your position at 442. And look at this. It's breaching the levels. 442. You would have been a couple of these Bollinger Bands in. So it's telling you right there, there's a chance that it might change direction. You might want to lock into 50%. And also, if you look down here, look, it's above 30. It's above 70. It's actually hitting 75. So that means it's oversold. So the system is telling you, here, I'll bring this over again. The system is telling you, okay, well, you're in at this. You really should sell some of this just to reduce your risk, because you're trading conservatively. You might want to lock in 50% of your position at this price. So at that point you're locked in. There's a chance it could go down, because it's in the Bollinger Bands, it's oversold. But for whatever reason, it keeps going up higher. So there was a lot of momentum, a lot of things going on, money coming in. So the next target of selling another 25% was at, what was it, 561. So at 561, so the first time it hit 561, okay, so it still stayed in the Bollinger Bands, and now it's saying, okay, even again, it was high here, right? It was where was it? It was up above oversold here, but now it's even worse at 661. 561. You might want to take more of your profits out. So you would have sold another 75%, 25% of your position here, and then what you would have done is, instead of having your stop loss down at 442, your stop loss down below 322 where you bought in, along the way as this is going up, the stop loss was incremented, right? It told you to reset your stop loss to 442. So it's guaranteeing you basically 120 points of guaranteed profit. So at this point, when you sold out of your 560, now you have a stop loss locked in at 440. So no matter what, it's a risk-free trade. You're in the money. In worst case, you're going to make 120 points if it stops you out. But if it doesn't, you have no upward limit of how high it can go. So ironically, it did go a little higher, right? But you're still in. So, the stop loss is set at 442, and then boom, something bad happened. Look at this. Look at this fall off. It fell off the freaking map. And a lot of times there's glitches in the exchanges. There's other things that cause these weird things to happen with these huge swings within a day to happen. But it protected you. It got you out here. So not only did you make your money on the first 20%, the first 50%, you made some more up here on your next 25%. It locked you in for a final profit of the 120 points. So we're coming back here and looking at the overall profit. Basically, with that trade, you made 46% on your position in a little bit of basically 2 months. Basically 2 months. So 23% per month, and a total of $149. So if you would have bought one Zcash and you held it for you bought it for $322. You would have sold it at these prices and then got stopped out here, and your net profit would have been $149.6678 per. You spent $322 and you made $149, so that comes out to 46%. So that's how this platform works. You could take out the emotions. You could just plug and play these numbers right in. They're high probability trades. They're trend traders. Again, they follow the trend. They don't trade against the trend. They don't try to get fancy with shorting stuff when it's oversold and all those things. This snapshot that I took here is a conservative. So there's also another version, not a version, but another filtered view that you can have if you want to be aggressive. So what aggressive basically takes out is that you don't sell 50%, you don't sell 25%, you hold, and you just move your stop loss higher and higher, and you let it keep going up higher and higher. So you're not taking in partial profits along the way. Let me see if I could do something real quick, and then we'll close it out. All right, so just real quick, I'm gonna do a snippet of this. This is the view. Let me get ZEC. Let me bring up ZEC USD just to be consistent with this other table that I have here. Okay. Now let me create a snippet. I can't show you real time, but if I'm taking a snapshot, it's not real time anymore, right? All right. So this is a snippet of the screen that you're used to seeing with the profits, right? And now I'm going to do another one showing the aggressive. So snippet. Aggressive. Okay, so side by side. All right. So if you were doing the conservative trades, like I said, you would have locked in 46.43%. Now, if you decided you wanted to be an aggressive trader, more risk, more reward, the same exact trades, you could see it wasn't closed out. Right? You got in right here. You haven't sold anything. Right now your stop loss is very much lower, so you're allowing for long swings because you're dealing with a weekly time frame. So you're looking long term here. So if you would have bought in at this price, right? Right now, if you sold at this current price of $694.7185, you would have had 57 days, but you would have made 115.52% right now, and you would still have the position. And basically, you just got to make sure you adjust your stop loss accordingly. So like if you locked out today, you would have done more than double, right? You look at this, it would have been more than double. And look at this craziness. 241, you a conservative, you'd be at 22%, and if you would have done the aggressive version of the trade, you're at 400 something percent. Look at this. Some crazy numbers, right? So aggressive's not for everybody. You could switch the screens back and forth to and kind of figure out what your identity is. If you could stomach the long aggressive positions that they suggest to you, there's a lot more money to be made. I mean, look at this. This is like 20 times. You could have made 20 times the money here. For a $241 investment, you could have made, I guess $453. So that's like, it's a lot of money. Actually, that percentage doesn't sound right, actually, now that I'm looking at this. No, you would have made, I don't know how it's coming up with 400% though. To me, if you doubled, that'd be 100%. If you doubled again, that would be 200%. There's something funky with that percentage. The number's right. You would have made $400, but I don't know how they calculate 400%. That should be like 200%. Now let's see about this one. Let's see. You would have made 300. This is right. Right? This is right. From 300 to this is $300, and that's a little bit over 100%. So this is something I gotta actually mention this to the programmer. They must have did their math in this column wrong. But I mean, the trade is real. It's not 400%. It's more like 200%. But still, that's still 10 times more than you would have made here, right? I mean, this trade is not over yet, so there's still more to be made here. And this trade is not over yet, so there's still more to be made here. But at the current situation where you are, you took 50% off the table. So you haven't appreciated as much as you would if you had it all still in play, right? So that's why, this is 200%. I mean, just like anything, there's always a glitch. So this is actually a good thing that I took these two snapshots, because I could send this to the guy in charge to kind of take a look at this and find out why that percentage is wrong. But all right. Well, I'm going to leave you with one last thing, and then I'm going to call it. It's already an hour again. Oh, my God, guys. I'm so sorry. I just keep on talking, right? All right. So I mentioned yesterday about these triangles that are happening in multiple cryptos. A trend line is basically created from 2 points. So I've created these 2 lines off of a couple of these points, and for the most part, it's been representing and following and staying within this triangle. So what they basically say is 80% of these closing in triangles, 80% of the time, as you approach in time, 80% of the overall time of this triangle. So it's February 1st. Right here, it's middle of December, so that's 2.5 months. So what's 80% of 2.5? 2.5 times 0.8. Yeah. Wow, that was pretty simple. Is that right? 2.5 times 0.8. 2 months. Wow, that's pretty cool. All right, so you're looking at December 17th. So January 17 would be 1 month, right? No, is that right? It's not 2.5 months. It's 1.5 months. Yeah, it's 1.5 months. Sorry, miscalculated. 1.5 times 80. Times 0.8. So 1.2 months. So a month and approximately what? What's 20? 1 month, 6 days, something like that. So 17, right? 17 to 17, and then a couple days. You're gonna get somewhere around here. So somewhere around here, somewhere in this range, typically it makes a strong move down or a strong move up. And basically what they say is you should cut this in half. I've seen this discussed where they say to divide this triangle in half, and as it approaches the 80th percentile mark, you can either have a buy and a sell at this exact vertex, and whatever way it's going to go, you wait for it to go, check and go, or go, check and go, and you kill the other trade as soon as possible, because it's usually a very momentum driven move out of here. So you could play both sides. You could have trades entered or ready to enter on both sides of this, and then you just wait for the check. This becomes like a resistance line. So it's going to come down, it's going to check and go, or it's going to go up, it's going to check and go. And depending on what side you're betting or what side it happens, it's usually a very powerful move up. Now, I've seen other people talk about this. They're suggesting a couple things. This is media related. So the media is saying that the stockbrokers and the hedge funds, they're going to get all their bonuses on the 15th. And they feel that, and based on them talking to a couple people or a bunch of people that are in that business, they're all kind of saying, we're going to use a lot of our bonus money to get positioned into the cryptocurrency for 2018. So they kind of feel that there's going to be an influx of extra money that wasn't available. And the way that the traders are taking it wasn't part of money they had anyway. Why don't we just put it back to work for ourselves? And they're expecting a big push upward, somewhere in the 19K to 20K target. Now, I'm not saying this is going to happen. This is just, you could see the consolidation happening. It's decaying. It's decaying, and it's going to hover somewhere around the middle of this. Is where going to be. It's going to decide to finally make the move. It's going to either go hard up, hard down. And you never want to just get in right away, because it could be a fake out. So it could start moving this way and just start going back up. You always got to make sure that whatever way it's going, it comes back and checks. It's going to always typically come back and check a resistance line of where the resistance was created. And if it bounces up, the candle that starts being in the whatever direction it's going to take, that's when you're supposed to try and get in on a trade. Now, also, with other things going on here, you want to take into account these Fibonacci lines. You want to consider the oversold, undersold situations here. Those are all going to be important things. And then, if you had access to this, or, you had, the system, you could be looking at this, and you could start looking for some buy signals for BTC USD to pop up here and see some price targets, and then you can start kind of figuring out what your plan of attack will be. So you're basically waiting for it to happen instead of you chasing it and figuring out, okay, when should I get in and what should I do. You kind of have a mental idea of what can go down and what would I do in the different scenarios. So you got to know when to get in, and then you got to also know when you want to get out. And again, this kind of takes away that emotion. It tells you when to get in, tells you when to get out, and tells you what to do. So there's no thinking involved. Now, of course, if you're smart, you're going to kind of do your own little thing here and get used to the patterns that are generated and the way things work to kind of give you that extra confidence that you're making a good trade, right? So this is my suggestion, just my opinion. This is not any type of financial suggestion and advisory to you to do anything. Figure out for yourself what you want to do. Figure out how you want to position yourself if you want to do it. Take responsibility for all the decisions you make. I am not suggesting you do anything. I am sharing my thought process on how I go about figuring out what's right for me. And hopefully, taking a step back, and don't worry about the individual trade, but think about the thought process and the things that you need to see. For example, when things hit the Bollinger Bands and it pulls back, and then a trend line, and it's respecting the trend line, right? So those are all things that are kind of justifying an entry to a trade. And then the final layer is, if you had this, you can actually use this in conjunction with everything else you're doing. So I'm way over time here. I really didn't think this was going to go an hour, but I did want to show you how, utilizing this app to keep it simple, utilizing some of the things I mentioned here about the Bollinger Bands, the median, the RSI, and then if you had, if you decided to get access to this, these are all things that are going to position you with your toolbox to make high percentage trades. And then, actually, I think there's one more thing that I can show you here. Right here. There's a book here that I will put in the video description. I'll put the link for it. It's free. It's on the internet. It's a PDF. It's 400 something pages, but high probability trading. They talk about a bunch of different things. So if you want to get into the nitty-gritty of technical analysis, this is a book that you should get your hands on and start using. All right? Hang on real quick. All right, guys. Sorry. So this is a really cool book that talks about the technical analysis and market trends, and basically this will give you the under the hood of what this platform does for you automatically. So if you're the type of person that wants some insight on what really is going on, and the oscillators and overbought, undersold, divergence, and a lot of the things I've been mentioning, basically you can figure out if the RSI in the graph are different. Typically that tells you there's a signal for a change in direction. So you can see they're showing here that there's some divergence. Boom. There's a point that it changed direction. And then here's another example from 3 to 1. It's upward. This is downward. Boom, another change in direction. So it's just a way for you to, it's just yet another way of determining a signal that tells you that, okay, I got a signal, for example, maybe I have a signal here to buy. Maybe at this point it's breaching, it's going into the Bollinger Bands that you have on your graph, right? This right here. Maybe on the downside it's breaching those. And then, even in fact, on top of that, it could be oversold or overbought. So here it's oversold. There's no Bollinger Bands here, so you can't really see, but chances are it's in the Bollinger Bands here. And basically, this would be a signal to buy. And this would be a signal to buy. And really, like right here, you could see a little bit of divergence here. So it's a lot to be, this is the stochastics, but also you can use RSI. So I forgot what this is called. I guess they just have it listed as stochastic, but this is the RSI down here that I have on my screens, right? That's this down here. So they're just basically saying, if you look at the price action and you're seeing points where it's going down up here, it's going downward here and upward here, that means there's going to be a change in direction that's probably going to occur. So it's just another level. But I'm getting off topic and I'm making this video longer than it needs to be. But my point is, I'm going to put this link. You guys can get this by just clicking on the link. It's free. It's 400 something pages. Listen, don't get caught up on reading this entire thing. It's good to know these details, but you're not going to learn this in like 2 days or a day. I've been doing this for years. So this tool right here, I guess the point I'm trying to make is that this is kind of giving you the background to let you know what these algorithms and these signals platforms are doing and how they come up with these entry points and exit points based on analyzing the charts and analyzing the stochastics, analyzing the RSI. It's probably looking at Bollinger Bands, Fibonacci, Elliott wave. All these different things layered on top of each other is what the algorithm does automatically instead of you sitting here doing it manually on the graph. So there's something to be said to get started and get started earning money, making money by getting this platform. And then, of course, the best possible thing you could do for yourself and your future, you know, is learn the skill set. You learn this, and you own your future, right? That's ironic. I mean, that's my website name, but own your future. No one else can take away what you learn. So having this as a toolbox, as a signal, as a confirmation on actually looking at these charts and seeing it, and then using this to kind of take the emotion out. Okay, I see it. This is where I can get out, and this is what I should do. And you don't chase it. You don't get emotional about it. You don't put more money in because you think it's going to go negative. You use proper risk management. You do all those things, and you'll be a successful. Biggest thing in traders hang up and why they don't do so well is the emotions, their mindset, their keeping themselves in check and making sure they stick to a trading plan and manage risk. Managing risk. So any given trade, you typically want to risk no more than, this is in the Forex market, you don't want to risk more than 3% max. And as your account goes higher and higher and higher, you're going to go lower on your risk. You're going to only want to risk 1% because 1% is going to be a larger number. Like if you have $1 million in your account, right? Now, for example, let's say you do a $1,000 account, you risk 3%, $30. Now, if you take $1 million account and you risk 3%, that's 30,000. That hurts a little bit more, right? So, I mean, yeah, I mean, if you had $1 million, maybe you have a lot more money than $1 million that you're not trading with, but still, at $1 million account, maybe you're only going to risk 1%. You're going to make some good money with that 1% because it's so many multiples higher than, you know, your $1,000 account. So, is that right? What did I do here? I don't think I did this right. Times 0.03. 30,000. Yeah, 10%. So, I mean, yeah, 1% of 3% of 1 million is 30,000. 1% is 1/3 of this, so it's 10,000. So, you know, when you're at the big numbers, even 10,000 sounds like, I mean, in my mind, it still sounds like a lot to risk on any given trade. But just realize you're risking, you know, 10,000, and you're possibly making 20 or 30,000 on the trade. So, you know, you always want to have they call it risk to reward, right? The ROI, return on investment. So you want to risk, you know, you want to be able to make 2 to 3 times as much as you're willing to risk. So if you're going into a trade and your risk level is 30,000, you want to position yourself for a trade where you're going to make at least 30,000, but more than likely you want to be able to pick a trade that's going to give you the possibilities of earning 60,000. You want to do a 2-to-1. And you don't want to just do 1-to-1 because that's a 50% chance, right? If you're risking 100, you're only looking to make 100. You really want to risk 100 to make 200. You want to risk 100 to make 300. You know, you got to have those multiples. Those are the important multiples. But then on the negative side, you want to enter the trade so that your risk side is much less than what you can gain. All right. So that's always. I mean, it's an obvious statement, but maybe you needed to hear it. But anyway, getting back to this, I'm gonna put this link in here. You guys can access this PDF. You could save it locally. And what I would say is, if you ever have a question, you know, like something I said or something you read, you could probably find the answer by coming here and taking a look at it. So this should be like your Bible, you know, multiple time frames. Basically here they're telling you to look at multiple time frame analysis, where you want to not only look at one time frame, but you want to look at the 15-minute or an hour, 2-hour, daily, weekly, to figure out what's going on in the market. So, I mean, it's a really cool book. Look, breakouts and reversals. You know, trend lines. Look, they talk about breaking trend lines. So that kind of basically refers to what I was saying here on the Bitcoin, right? That's us. Oh, it's on my other screen. It's on my other screen. right here. These are trend lines. So at some point here, there's going to be a breakout, and the breakout's going to be big. Okay. All right. Anyway, I'm stopping this video. Make sure to find me on Facebook. Subscribe to my YouTube channel. Always here. If you ever want to find my portfolio, just click on this banner right here, and when the description pops up. What's going on here today? Looks like I lost Wi-Fi. All right. Anyway, video's done. I look forward to having you on my team. Follow me on YouTube. Get me on Facebook or one of the other social media platforms I have listed here. Just, do what you need to do to change your life in 2018. Like I said, cryptos are going to be your solution. And some of the products that we have and the team has are things like this that can assist you to make that money to change your life. And in addition, if you look at the opportunity further, there's a lot of other benefits. Getting involved with the new cryptocurrency that can go up at least 5,000 or more %. Again, there's no guarantee. I want to make sure everything I said here is just my journey, what I'm doing, my opinions. I am not telling you anything's guaranteed. Please be responsible. Take action for your own, take responsibility for your actions. Make sure you do your due diligence. Make sure you're comfortable with whatever you're doing. Always use risk money. Don't bet the house on it. There's so many media reports of people going into mortgage debt to buy Bitcoin. Don't do that. Don't do that. Find a way to create the money. There's so much money out there to be made. If you don't have the money, find the money. Build a team. Get some commissions. Use those commissions. Push that money back into the marketplace to work for you. Buy your cryptocurrencies with the commission money that you're generating. You don't have to use money that you need to survive on. You don't want to go into debt for this. Your idea here is to do stuff that's going to get you out of debt and further into abundance and time freedom and all that. And you don't want to risk something that, there's risk involved. I mean, cryptocurrencies are new and there's risk. So please don't bet the house on it. Don't do anything that irrational. You got to be smart about it. And like I said, what I did was when I started years ago, I got involved with one. When I started making money with one, I started branching out to another one. Then I branched out to another one. Then I used the multiple incomes from those to branch out to another one. Then I got involved with trading. Now I'm trading. So you just use the money you're creating. Don't pull money out from something that you need to live. Your car payments, all that stuff. Don't put yourself at risk like that. You can do this. You don't need a lot of money to do this. You can start broker accounts for $1,000, $100, $500. You don't have to have millions and hundreds of thousands of dollars to do trading anymore. But you do have to do the proper risk management because you could blow your account in 1 second if you don't do the right thing. But this offers a great opportunity for a coin that's in fractions of a penny right now and could go 20 cents or even higher. I mean, I don't want to even limit it to 20 cents. I'm just giving you the comparison to another coin, similar space, health stuff, that did that kind of move where it went from a fraction to, $20. I mean, to whatever its price was. And when you compare it to what we have, it would basically amount to a 20-cent valuation of the coin from fractions of a penny. So that's a 5,000 or more % move. So every dollar you put in would be worth 5,000, right? A 5,000% move. Let's make sure I'm getting that right. Let's see. 5,000. I hope I'm getting that right. I'm kind of tired. It's late, but basically 5,000%. So think of $100 going to 200, going to 400. No, I'm sorry. 200, 300, 400, 500, 600. So it might be 6,000%. 200, 300, 400, 500, 600. Yeah. So it would be 6,000. So your original investment would be there plus another 5,000. So think about it, get started, check out my page here, get connected with me, look forward to another video for tomorrow, and subscribe to my YouTube channel so you get alerted. So take care, have a great rest of your weekend, and I will talk to you guys tomorrow.